Hello, welcome to another talk on money, business, and investment. My name is Jose, I'm the founder of the company and brand here at Master Investor. If you're new to our community, ensure to subscribe and follow us on all of the social media platforms so that you stay in tune with what we are releasing weekly, as it's going to help us build our assets column. It's all about acquiring real assets that produce positive cash flow. In fact, the most important words in the business language are cash flow. Turn on the notifications so that you know when we go live or upload a valuable talk like today that can change our financials forever and for the better, as long as we apply the information that we're learning within our content. And of course, as we invest in other mentors and seminars and classes, because as we know, in order to build true wealth, we have to have a commitment with financial education. Number one expense we should all have listed on our expenses column is financial education and investing. We have to actively invest. So we learn something and we gotta apply it into our investing strategy. Today we have a talk on gambler versus inside investor. We're gonna talk about why majority of people tend to be gamblers instead of inside investors. And it requires financial education to become an inside investor. Our mission here at Master Investor is to elevate the financial well-being of humanity through high-quality financial education made simple. We're looking for opportunities to build passive income and true wealth. Networking is key when it comes to building financial freedom. If we are in a situation where we are coming out of bad debt and we want to position ourselves where we don't have to ever work at a job for earned income, and instead we will have assets where there's one business at first that will produce enough revenue to cover all expenses in our expenses column, including living expenses. And we don't have to worry about running out of money because the business is established so well following the 8 integrities inside of the cash flow triangle that we talk about in our community here at Master Investor, which the 8 integrities are mission, team, leadership, cash flow, communications, systems, legal, and product. Majority of people will only focus on the product, and they fail because a company that becomes a true brand needs more than just a product. We don't want to just build a commodity, something that can be replaced. We want to have something that isn't replaceable, and the way to do that is by adding intrinsic value and business integrity into our organization. The way to do that is by, of course, making sure that the business is built to create a profit, to raise capital from the front end, from sales on autopilot, and from the back end, from investors and private institutions like banks, so that we can expand our business. Okay, and more so if we live in the United States, because we are in a capitalist country which favors the business owner and inside investor. So here at Master Investor, we focus on building our entire life on the right side of the cash flow circle. Remember, there are 4 players inside of the cash flow circle. On the left side, you find 2 players. On the right side, we find 2 players. On the left side, we find employee and self-employed, and they work for earned income or active income or ordinary income, and it stacks at the highest bracket. On the right side of the cash flow circle, we find the business owner and inside investor. Here, we think differently, totally opposite than what the left side thinks. They think owning a business is risky. We think having a job is risky. They seek financial security. We seek financial freedom and total freedom, right? We attract it because we have excess of cash flow. On the left side, we find people that are rich. They get paid well through their job. They may be a doctor, an attorney, or even a solo entrepreneur, or maybe someone that is a professional and they started their own small organization, but they still have to show up to see the clients. Therefore, it's not yet a true business. Okay, they own a job, they're self-employed. And so on the right side of the cash flow circle, we build systems and control them. And the systems are already built for us, but a true business is a system of systems doing the selling and telling for us. So the business owner controls a system of systems, and as we get revenue and we get the surplus, we turn that into more passive income by investing it as an inside investor. And what is an inside investor? We put money to work through sound investing. We multiply money, and we do that through learning how to acquire cash flowing assets, whether they exist or we start them from scratch. The ability to be able to read a personal financial statement and a business or an investment financial statement is literally the keys to building true wealth. Because when we can see what's going on behind an investments operation, what is really happening with the numbers, what is the profit, what are the expenses, is it being mismanaged, can we improve the asset, right? If it's an asset to begin with, right? Because it could be a totally liability, it could be a toxic investment, but the ability to read financial statements will allow us to make that determination based on facts, not on opinions. Many people gamble when it comes to investing due to the lack of financial education and investing experience. As a result, majority of investors are gamblers instead of being an inside investor. But take a note of networking. Every single week, go out there and position yourself with other people that are like-minded, whether we're investing in that network, right? And there are many key places, and we talk about it all the time, how to approach strangers, how to build rapport in long-lasting relationships, because business and investing is a team sport which requires the understanding of people, because it's filled with people. Business is people, and so we need to understand how to manage our emotions, because we have to deal with other people's emotions as well. So we have to have control of our emotions as an inside investor. As a result, majority of investors are gamblers instead of being inside investors. Summary: an employee's perspective and an entrepreneur's mindset differ in a few important ways. Entrepreneurs that are successful prioritize their company and staff over ourselves. With all that is going on in the globe, this is one of those unusual posts that is highly relevant. There are huge disparities between the mindsets of employers and employees. People frequently claim that wealthy individuals are avaricious or greedy. However, what sort of wealthy people are we referring to here? Because the wealthy we are building here in our community are those who follow the steps of the wealthiest people in the world, who are very generous. The wealthy is generous, and that is why we attract wealth to begin with. Since we are thinking for others and their problems, then we find a solution to serve the masses. We create jobs for others and help people's families by creating companies that serve others in the world, including those in the organization. There could be some wealthy people who are greedy, since maybe they obtain their wealth by winning the lottery, or maybe they inherited it, but they were never taught the value of money and how it works. However, the wealthy people who have made the American dream possible are those who have worked, dedicated time, and invest in their companies that sells a valuable need that is in demand in the world. So the point is, what type of problems are we solving moving forward? What are we passionate about? Find a niche that we're in love with, and find a product that we can either build or improve and serve the masses through having a system of systems selling that product for us, because we want to sell it to more than 1 million people, as many people as possible. And we have to make sure that we measure our return on investment with facts, not opinions. So we need to do a lot of due diligence. Those are the second most important words in the business language. The first ones are cash flow, and the second one is due diligence. Make a note on that, because as we move forward with this financial education that we're providing here inside of our community, we are going to be able to apply every single thing that we're talking about, because we are building true wealth, and it matches with the ultra wealthy mindset. Everything that we do here is breaking down the core values of the ultra wealthy people, how they approach money, and how we build companies that literally impact the world for generations to come. the generosity and entrepreneurial mindset. Many entrepreneurs rank among the world's most given people, which may surprise majority of people when they find this out, as many individuals around the world believe firmly that the wealthy are greedy. Where it could be true that there are some people that may have wealth and be greedy, but if we are talking about wealthy people who built a company and brand, did it by being generous. In fact, the poor and middle class are greedier than the wealthy class, due to the fact that the wealthy class understands the importance of giving back. We become wealthier the more we give to others. It works that way, and it can bring us a lot of happiness. They have created fantastic companies and goods that improve the lives of those around us, in addition to giving generosity of our time and money. Some of us even go above and beyond to Call of Duty. One CEO in Seattle, for example, forgoes his own salary to provide his staff with an annual salary of $70,000. The employees' lives are significantly improved because of his generosity, for example. According to the corporation, the number of children that employees were having went from 0 to 1 per year to 6 to 7 per year, and more than 10% of his staff made their first home purchase. According to the corporation, over 70% of employees who were unburdened with debt or had a bad debt were able to make part of the payments toward their debt, and individual 401k contributions more than double. But we don't suggest anyone, even you are in a position where you can invest in a 401k, it's better to invest that into a real asset, because as we know, 401k, mutual funds, IRA, we label those as fake assets, and the reason why is because our definition of a liability is something that takes money out of our income column, it comes out through an expense. And maybe that is a liability that we want to have, maybe something that we truly love to have. And there's nothing wrong with having liabilities, but first we need to find an asset that will pay for that liability, so we don't have to pay for it. The asset is going to pay for it. But the difference between an asset and liability is that an asset puts money into our pockets whenever we're not working. It's a system of systems that is selling something to the world for us, okay? And so it puts money even when we're sleeping or when we are out and about. We don't have to be present to make that money. That is a true asset. Now, if a 401k setup is where the passive investor, because it's not an active investor, it's a passive investor, the employee is a passive investor, someone that lacks financial education and gives their money away to somebody else. That is a passive investor. You lose power, you lose control, you lose leverage, low returns, no returns at all, because the 401k requires the employee to put money into the account. It doesn't put any money into their pocket. They're not seeing cash flow coming in until they pull it out. And even then, if it doesn't work out, then it's a liability. It continues to be a liability. Now, if it turns out to that they can cash out, but still it doesn't provide cash flow right now, therefore it's a liability today. So be careful what we label liability and what we label asset. Make sure that they are labeled correctly on our financial statement. We find that a lot of people have labeled their home as an asset when in their financial statement should be labeled as a liability, because it doesn't cash flow for them. It cash flows for the bank, but it doesn't cash flow for them. They have to go out there and work for that money to pay for the loan. However, if they will rent the house through an Airbnb setup, and now it cash flows and it brings enough positive cash flow to pay for the debt service, the loan, the mortgage, right? All the maintenance, the cleaning, and any other expense, such as taxes and whatnot, then it will be an asset, because now it's creating positive cash flow, not only for the bank, but also for the individual. Okay, so make sure that we know exactly what we are labeling an asset and liability based on the return on investment, the way the cash flow flows, whether it's flowing into our income column or out of our income column. Very simple. Keep it super simple. As you know, if it's too complicated, then we shouldn't do it. even though business and investing is a complex subject, we keep it very simple. And it should be 100% simple when we're investing into something. The numbers should work in a good investment. The numbers are not going to work in a bad investment. So based on those facts and reading the financial statements, we will decide whether that is an asset or is a toxic investment that we should pass on. The wealthy uses the right side of the cash flow circle to create wealth, as seen in the diagram below. Many people live on the left side of the cash flow circle. If you want to have this diagram and write it, make sure you go to our newsletter on our website. If you're watching this on a live stream right now, our newsletter is free and you will have the articles via email when we publish one. And for those who are listening to our podcast right now, make sure you go to our website and YouTube channel, subscribe to our newsletter as well, so that you can also see the diagrams, as they are important to help us understand more about how to create wealth and how to act like the wealthy person. The people that live on the left side of the cash flow circle, employee and self-employed, they never get to experience total freedom, meaning that when we build a business and solve other people's problems with a solution as a reward of being a business person that is generous, we will gain control over our time at all times due to the excess of positive cash flow and being able to live without worrying about paying for our expenses, because we have cash flowing assets that are producing income for us in the form of passive income and capital gains income. Those are the two types of income that a person can obtain from investing: passive income and capital gains income. Here at Master Investor, we focus on, rule number one is that we focus on building and working for passive income and making money multiply through sound investing. That is rule number one, and we respect and we honor that every day, because as we follow that mindset and we continue to develop the eye for investing that creates cash flow, investing for cash flow, then we can create true wealth, because cash flow, the excess of cash flow, is what is going to give us total freedom. And along the way, we will obtain capital gains income, because some assets in certain asset classes, there are 5 asset classes that exist. Number 1, business. Number 2, real estate. Number 3, crypto. Number 4, paper assets. Number 5, commodities. Some asset classes will only bring capital gains income, and we are going to diversify among the 5 different asset classes to protect ourselves from down economies and hedge for inflation. Not like many financial fake gurus talk about all the time. They encourage their followers to invest in one asset class only, to diversify within one asset class, and usually the paper assets, stocks. And when the market crashes, because it's unpredictable at times, because the economy goes up and down, and we know that, then if all the eggs are in the stock market, then the investor loses everything. And that is why it's important to learn how to invest ourselves, not to give our money away to anybody to invest it for us. And we need to learn how to build our businesses, our brands, how to invest in different businesses. There are new entrepreneurs looking for funding and capital, so we can put deals together. We can raise capital for these entrepreneurs with great ideas. We don't have to create the idea ourselves. We can look at other people's ideas that are looking for funding, and we can buy their companies out. So again, as an inside investor, we are close to the deal as much as possible, because we are actively investing. And that's key right there. To build true wealth is that we have to be as close as we can to the deal. The farther you are from the deal, the less money we will make. The closer we are, the more money we make. And how do we become close to the deal? By having control over our assets, by having control over our cash flow, not giving our money away. We're going to do that ourselves. We're going to incorporate our companies. We're going to begin to invest in our financial education. We want to acquire real estate property, a hotel, We're going to invest in a seminar that will teach us how to do that. If we don't want to do it with money and we can actually raise capital, we're going to invest in a real estate class that will teach us and show us how to do it, because the individual has done it already, or the person who is conducting the seminar has done it already in real life. Okay, so it doesn't take money to make money, really. It takes financial education for us to be able to make more money through sound investing without gambling. Yes, when people invest and grab their money and they use it, they're usually gambling. They're not investing. They're praying that the market will go up and then they can sell whatever they bought so that they can get that capital gains income. But they're not really building passive income, and they're sitting there holding and praying, which is too risky for the inside investor. We need to make sure that we know exactly what we're going to get from our investments. When are we going to get that money back? And we need to put everything in writing. We need to have contracts, and evidence is the most important thing. Always cover ourselves when it comes to business. Let's make sure we write everything down and we check everything with the law, because as we build our assets, we want to protect our wealth and make sure that we are doing everything by law. Being ethical goes far. Being ethical and having honesty is important, because our reputation is one, and we cannot taint that reputation, as it's important that other people talk well about our brands and what we're doing in this world. The greedy and high-paid employee mindset. However, there's another kind of rich individuals, well-paid employees. Even if they could have a generous heart outside of work, highly compensated employees are frequently extremely greedy at work. Even in bad times for the company, they will always demand more. An excellent illustration of this was the 2017 report regarding NFL Commissioner Roger Goodell's request for a raise. While negotiating a contract extension with the NFL at the time, Goodell requested lifetime health insurance for his family, lifetime use of private plane, and an annual salary of reportedly $49.5 million. He had amassed almost $30 million. One anonymous NFL owner stated during the contract negotiations, there are a number of owners in our league that don't make $40 million a year. For Roger, the amount just seems excessive. It is insulting. It is impolite. For those who might not know, the NFL was a tax-exempt, non-profit corporation until recently. Additionally, Roger Goodell has worked for the company for his entire career, rising from intern to the position of, in the opinion of many, the most powerful men in sports. The thinking of a highly compensated worker or employee. They deserve a raise no matter what. The league was having financial difficulties when Goodell was negotiating his enormous raise. The ratings dropped according to Michael McCarthy's report. According to Nielsen data acquired by Sporting News, the league's average TV audience through week 5 of the 2017 season decreased 7% when compared to the same period in 2016. Even worse for the league, average game attendance has decreased by 18% for the first 5 weeks of the 2015 campaign. Through week 5 of the 2017 season, the average TV viewership of the NFL, including Sunday afternoon, Sunday night, Monday night, and Thursday night games, dropped to 15.156 million. This represents a drop of 18% from the average of 18.438 million viewers through the first 5 weeks of 2015 season, and a drop of 7.42% from the average of 16.371 million viewers over the same time of the 2016 season. The league was also being negatively impacted by the national anthem protests, numerous other scandals, and ongoing worries about player head injuries. Many thought it was a strange moment to request a $20 million rise. He ultimately received $40 million, only a $10 million hike That is, however, what Goodell did. That is greed. A wealthy person who operates with a wealthy context, he or she understands the importance of a financial statement, starting with our personal financial statement. The essential words that compose a financial statement are listed in the diagram below. Every business and investment contains a financial statement that tells us the real story behind the operation of such business. By reading the financial statement, we can see whether such is an asset to acquire or a bad investment that we should leave alone. The people who operate on the left side of the cash flow circle, like Roger, the employee and self-employed, should begin to see the importance of the financial statement. The only way for a person on the left side of the cash flow circle to shift into the right side of the cash flow circle is by first shifting our beliefs about money. We have to follow the new rules of money in order to create wealth. As we can see in the diagram, we have the financial statement displayed in a simplified manner. We have the income statement. It shows as word number 1, income. Then we have number 2 right below, expenses column. And then we have the balance sheet underneath the income statement, which shows 2 columns. And it's the assets column, liabilities, and then we have the buying on the right side column, and it shows also the credit column next to it. And we have the net column next to the balance sheet, and also we have the cash column next to the expenses column on the left side. So as we learn how to navigate our personal financial statement, we will also be able to navigate a business financial statement and read the true story behind that investment, so that we can either improve the investment if we're going to acquire that asset, or we're going to pass on the opportunity to focus on a better opportunity that actually cash flows. High earning worker mentality, show me the money. In many ways, it appears as though the business world has gone insane, pursuing this greedy, well-paid employees out of dread of what exactly? There's a clear pattern that rich workers, right, or people that get paid more than others, athletes and so forth, actors, such as even CEOs, continues to receive rises despite the underperformance of the companies they oversee. According to the Vanessa Forman's and Theo Francis articles in the Wall Street Journal, according to journal research, the average pay for the CEOs of S&P 500 businesses increased to $12.4 million in 2018, a 6.6% increase from the previous year, and the highest level since the 2008 financial crisis. However, the company's median shareholders' returns was a 5.8%, which is the lowest result since the financial crisis. 97 CEOs received the highest salary possible last year, despite their shareholder returns being among the lowest in the group. This included the dialysis company DataBeta Inc., which paid Kent 30 twice as much as he did, $32 million, in Gap Inc., which gave Peck $20.8 million, the most amount he received during his 4-year tenure, but generated a negative 21% return. All of this makes it worthwhile to compare and contrast the employees versus employer mentality or business owner mentality. Ownership is the thinking of the employer. Ownership is the mindset of the employee. Prioritizing their enterprises is one of the traits of successful business owners. We are accountable for resolving any issues that arise if the business is suffering or losing money. We must assume responsibility. Contrarily, employees are exempt from having to make the same sacrifices that we owners do. In fact, a lot of them, including Roger Goodell, demand higher compensation even during lean times in the company. They leave for another company if they don't receive their wants regarding their raise. Employers should foster stability and employees should demand it. Establishing a business carries a great deal of risk and uncertainty. Nonetheless, prosperous business people have the power to take ownership and turn it into a flourishing enterprise that offers security to many working families. The truth is that workers frequently are unaware of the lengths an employer will go to maintain their job security, right, for their employees. Employees seek stability for their companies because they deeply dread instability. Even when the business isn't doing well, one of the reasons employees demand more and more from entrepreneurs is because they believe money brings stability. Sadly, as several tales of success from poverty may attest, it doesn't. Working as an employee carries a great deal of danger for financial security. They pay the highest in taxes and have no control over their time. Additionally, they will be the first fired if things go too badly for the company, especially if they were seeking for more money at that time. Which frame of mind are we going for? The employee, business owner, self-employed, inside investor, right? Where we want to be, on the left side, on the right side. We have to make a choice. We have to figure out that our lives depend on what we do moving forward when it comes to how we approach money, okay? Are you going to approach money like the people who live on the left side of the cash flow circle, or are we going to adopt the wealthy mindset and begin to invest like the wealthy do and act like the wealthy person? Because we have to be, do, have. That's how we become anything in life. We have to project ourselves as the person we want to be, and we have to tell ourselves that movie in our mind over and over again until it becomes into fruition in this reality. And we need to also put into action a plan that aligns with that movie in our mind. So we need to be resourceful as we move forward. We need to adopt the new values about money. We need to understand the new rules of money. That's why we created the 10 new rules of money. We have how to build cash flow with the internet, turn passive income on, and how to invest in crypto to build wealth, understanding Bitcoin. Our 4th ebook will be released in the next month or so. It's called How to Raise Capital to Build Wealth. And make sure you go check them out right now and get them. You can find them on Amazon through Kindle, or you can also go to our website and get the ebook there. We have turned it into a digital course that is vivid, that we are adding more assets into that digital course that will emphasize more on the subject of each volume. So the ebook comes with additional assets, and when we get in, we have access to any other asset that we will add into that digital course moving forward for no additional cost. So it's a great investment for our financial education and our future, as we are going to be improving and adding more assets into that digital course, and we have access to them for a lifetime. So take advantage, click the link somewhere around this audio or video, and make sure you visit our website to subscribe for our newsletter that is free, and also check out our products there. In the end, this is not meant as a criticism on the workforce. It is simply an admission of a distinct perspective and manner of thinking. It is all right. All that matters is that the appropriate mindset is in the proper place. A person may decide on one course and then decide to take another. These are the staff members who run our company like business owners. They are the most important employees we have, and they frequently depart swiftly to pursue other opportunities. While losing a fantastic employee, it's never fun seeing them become into an entrepreneur, and witnessing their perspective shift is a lot of joy when we see other people become wealthy and become entrepreneurs that have success and they follow their dreams and they reach their American dream, because we all can do it. If we have the fire, we have that dream. Some people are born to be employees, and that is okay. We need great employees. So again, is to be able to tell the difference between the two different lifestyles and mindsets that the employees versus business owners or inside investors, right? We have totally different mindsets, and we need to understand which mindset we want to go with. Even though they have successful lives, they also add greater value to the company. Every single one of us must choose at some point between taking the route of an employee or a business owner or an inside investor, right? Because on the left side, we have the employee and self-employed. And on the right side, we have the business owner and inside investor. And usually an inside investor is a business owner. However, you can start investing without being a business owner, but it's highly recommended that we build a business and we know how to build one so that we have more understanding of how to invest. Which one we will select? We must ensure that we prepare for the shift in the economy as we move forward. The only way to prepare is by studying financial education daily and applying the knowledge that we are learning from our mentors into real life. The international economy is about to enter a crisis, or it has already entered. It is unavoidable, but we may prepare for it by creating an investment plan. Starting now. Prepare an investment plan. The time to get ready is now, since the next financial catastrophe is not far off. Never forget that savers are losers in this new economy. Saving money is losing money. Saving money does not guarantee a secure future. Getting a financial education is the best method to advance in understanding how to be an inside investor and win in the game of money. We first need to grasp all the concepts about wealth to create wealth successfully. The first step is to start investing in our financial education and assets that we control with our companies. Saving money is not a good strategy because savings require the individual to pay taxes on it. It hinders the entrepreneur spirit, as the individual doesn't learn anything by saving money. It usually happens automatic. And the other negative is that it cannot keep up with inflation. Saving is losing money, savers are losers, and good debtors are winners. Those who invest using debt, those who understand how to move capital and how to raise capital, how to control systems, how to fill a need in the world through systems, those people will become ultra wealthy. And more so now with technology and AI that we have, way faster than before. Outdated school funds. The only financial crisis advice we will receive from so-called experts is to go to school, get a job, work hard, save money, buy a house, pay off debt, which is the opposite of what we help those in our community understand, that this game is of debt, the game of money. Money is debt. So let's be friends with debt. Let's use debt to become wealthy for free. Instead of being out of debt, we're going to be in good debt as much as possible, and we're going to also be in bad debt because we have businesses and we have excess of cash flow from our businesses and investments that we acquire using good debt that will pay for any bad debt that we have on our financial statements. So the key is to improve our assets column and invest for the long term with a well-diversified portfolio. Oh, and then the advice continues, right? The advice of the so-called experts, which are fake, right? And they tell people pay off the debt and invest for the long term with a well-diversified portfolio of equity, bonds, mutual funds, and fake assets and exchange traded funds. All of these are fake assets. Is the opposite of what we help people understand here. The trouble is that this whole thing is imploding like the Hindenburg. So everybody who followed that advice is now toast. We pin our content with the intention here at Master Investor of educating people about the impending severe financial disaster and opportunities it brings to the financial educated investor. We wish to alert people about it, show how to be ready, and help anyone make money from any type of economy that we experience now and in the future. Regretfully, the 4 years of prediction that 2016 will see the largest crash, March 2020 saw its arrival. Furthermore, we believe that the world has changed irrevocably and that the economy is not going to recover. The reason it took until 2020 instead of 2016 is that due to Wall Street, the US government and Federal Reserve Bank's desperation, we were unaware that they might implement quantitative easing, which essentially went against the Federal Reserve Bank's economic guidelines. Savers are losers since trillions of dollars have been printed in the last few months. Given that governments are printing money, why would we want to save money? Because the dollar purchasing power worth is declining significantly. Saving money results in financial loss. There's no doubt that we are about to enter a deep recession, perhaps even a depression, and perhaps even an economic collapse. That is the level of danger that exists now, but it should not scare us away of any investing. In fact, it should give us the power and the fire that we all need to begin to invest like the wealthy do and protect ourselves from any type of economy. Because even if the economy crashes, we still be able to do business, okay? People still need to live, they need to eat, they need to put a roof over their head, and so forth. So business will continue. So we need to prepare by investing, not saving money. It indicates that we are getting ready and building a strong foundation for ourselves to weather this financial catastrophe if we are reading this article or listening to this podcast or viewing this live stream. An outline of a true financial education as opposed to the fake information they present from Wall Street will be provided here in our community at Master Investor. Long-term stock market investing is a suicide mission, particularly since March 2020 when the largest crash occurred and is currently occurring. It continues to enlarge. The actual crash, which we most likely haven't heard about, commenced in September of 2019. The shadow banking system collapsed at that point. As we can see on the diagram, we have the cash flow pattern of the wealthy. We have the financial statement showing. In this financial statement, the positive cash flow comes from passive income and capital gains income assets that we control with our companies. And then we will invest back that those expenses can turn back into assets. We call them good expenses. So we want to increase our expenses with good expenses. That's why as number one expense, we should always have financial education and investing, because we're always moving money into an asset and we're going to turn expenses into assets on our assets column. And it requires financial education, but as we can see how the cash flow is flowing from the assets column up to the income column, goes down to the liability column, up the expenses column, and it comes back to our assets column. That's the cash flow pattern of the wealthy, the shadow banking system's demise. What then is the system of shadow banking? In essence, it is a conveyor arrangement where banks lend money to one another for very brief intervals, 24 to 48 hours, to maintain a clean balance sheet. It is a buddy system with extremely low interest rates and cheap loans. However, in September of 2019, the shadow banking system collapsed, and all of those massive financial organizations, including Deutsche Bank, the world's largest bank, suddenly found themselves without any money because there was insufficient money in the globe to pay off or conceal their obligation. The interest rates on shadow bank loans skyrocketed from incredibly low levels to 10% in abrupt and massive inflation. That indicates that the markets lacked faith in our financial institutions, including our banks. The financial institutions and banks had little faith or confidence in one another. That was the first indication of a weakening economy. To add to the chaos, interest rates were falling for consumers and the public at the same time as the banks were hiking rates on the largest banks' financial entities because they didn't trust their fellow banks. The big banks are now charging more for deposits, but at the same time, they were offering average citizens and peasants who weren't part of the system's low interest rates on stocks and investments. The stock market reached a record high as a result. As an example, in December 2019, the unemployment rate was at a historic low of 3% and the stock market was at an all-time high. However, as any expert investor knew, everything was set to crash and burn. All the other common people who never got any financial education, those who are passive investors, took advantage of the low interest rates and entered the stock market. In other words, the knowledgeable investors left and everyone else jumped into the market. Then suddenly, just when the Fed and other influential bankers realized the domestic banking system was about to collapse, the coronavirus panic struck. They required an excuse, a scapegoat. Let's talk about coronavirus. The public now believes that a coronavirus crisis is the true issue. However, it served more as a smokescreen and a distraction from the current financial crisis. This isn't a controversial remark. Rather, it is the idea that the virus was a front for the truth collapse. How far will this collapse go is the question. We don't believe the accident is over. We believe it is only beginning. We believe that the impending crash could be the largest in Earth history. Right now, we are on the verge of depression. Additionally, the last slump, which began in 1929, continued for 25 years. How long do we believe this slump will persist, given that it is significantly larger than the Great Slump? Does it still make sense to invest for the long term as per traditional advice? It doesn't, because we need to have velocity. We need to tap into cash flow now. We need to catch early trends. Everything is changing quickly and is evolving and is going to continue to change. Action plan for managing the real estate crisis. We must acknowledge that we have stepped into a fearless new world. This is unsettling. However, it is a good thing to be alarmed, and it's a good time to start investing, as nothing is worse than a person feeling at ease during a collision of the economy. Real estate interests are nothing to worry about because, as we understand, raising capital is key when it comes to building wealth. And when we do that, the numbers should work in the financial statement. And the investment should bring enough money to take care of the interest rates for the debt service and any other expense. Plus, it should leave us a surplus. Real estate interests a lot of us. Here are several principles that we can all use to cash flow positively and protect ourselves from down economies using real estate. The first real estate investing rule, they have always operated on the fundamental tenet that employment drives real estate. Given the high rate of employment, prediction that 50% of small companies in shopping malls will fail, it is time to start considering alternative venues. Consider Orlando, Florida as an example. Disney World was closed. There were 1,000 fewer jobs. Same thing in Las Vegas. It was a town of ghosts. Consider Houston. The price of oil fell. That is a challenge because their unemployment rate will be greater than the national average. Owner-rented properties on Airbnb and VRBO have vanished. It is really challenging to travel if the person doesn't have an employment. Majority of people can't go to vacation, right? So where's the current real estate opportunity? If there's a positive aspect, what is it? Where's the chance? Anyway, real estate is driven by employment. Therefore, when new employment sectors emerge and change in this new environment, we must closely monitor them. there could be a lot of great opportunities around where all the employees are moving into. The second real estate investing rule, in summary, the first concept is that real estate is driven by employment. Investigate the real estate options in that area. If we can locate a location that is crisis-proof in terms of employment and jobs, we take our investment money and go to places where people are employed. We will best move if others were moving. The second rule is to avoid pursuing expensive houses that bring no cash flow to cover for the expenses of the property, including the debt, loan service, and any other expense. Avoid investing in luxury real estate if it's not bringing in cash flow, since the first people to downside after a recession or correction will be those owning expensive apartment and homes. These affluent tenants will soon relocate into middle-class properties, or what we refer to as B-class properties. Even though some will have to downsize, they still need a place to live. Speaking with other investors who oversees people's portfolio in property management, it becomes clear how effective this tactic is in the current climate. We are in a very fortunate circumstance, unlike many landlords who worry about their tenants not paying their rent, or worse yet, leaving their property. Adhering to this philosophy has prevented them from losing a lot of tenants, but it is not as simple as just making the right purchases. Tenants and us as the landlord are partners. We have to recognize that they are human and that there are a lot of people in need right now. Therefore, it is critical that we act to let tenants know that we are available and ready to support them during these difficult times. Business and investing are a team sport, but also it is business that requires an understanding of people's emotions. We must deal with other people's emotions. Controlling our emotions will be required to build true wealth. We have a team that have been extremely intelligent. For example, tenants are receiving monthly coupons worth $100 from them to maintain individuals in their houses even in the event of unemployment. They are also developing payment plans. We can always opt against evicting anyone because we can feel that it's more important to support people through crisis, and they choose to accomplish this by offering vouchers, payment plans, and other such solutions. At the end, when is our asset that we control, then we have a voice to improve and maintain the asset going and keep those members and those tenants and those customers in our asset as long as we can provide solutions for them. So it's about becoming creative even during crises. We don't have to kick everybody out if we can provide solutions to them and they are okay following that, right? So we need to work as a team and we need to figure out how to cash flow in any type of market. That's the message. Continue to pay attention to this conversation about principles 1 and 2 if we are interested in learning more about wealth. As we can see, the diagram below is showing how the 3% of people makes 90% of wealth. We're showing the financial statement and we focus on building passive income and capital gains income through sound investing. So our income, right, comes from the assets, right, from our balance sheet. From our balance sheet, we have the assets column and we have the liabilities. We focus on the assets column. We get paid from that assets that we are controlling, and then it comes into our income column, and then we reinvest that income back into our assets. And so that's how we create wealth. And this is about 3% of the entire population. So we need to focus on becoming an inside investor by understanding how to do business, by building a successful business, by understanding how to read our financial statement and improving that and investing for passive income. Becoming a business owner and an inside investor requires true financial education. That's what we're here to do at Master Investor. I hope that you enjoyed today's talk. Let me know if you learned something of value on this amazing talk. And if there's any questions, please write it down. We're going to come back and answer them. And I appreciate you being part of our community. Again, stop gambling and become an inside investor by investing in financial education and actively invest in assets that we control, that we have a voice on, that we have full control, because those are our companies that are controlling those assets, and become good debtors instead of savers. Savers are losers, good debtors are winners. Bring you the good and bad news of money, the business principles that work in all economies. Thank you again. Stay extraordinary and wealthy. Bye for now.